Welcome to Online Trading Campus and welcome to our unique OTC Futures course. Let's start with our Module 4, Advanced. Before we dive into the first lesson of Module 4, let me give you a brief overview on what topics we are going to discuss in this module. Lesson 1, Trading Sessions. In this lesson, we will break a 24-hour futures market into manageable trading sessions. We will take an in-depth look at each of the sessions as well as those periods when the sessions overlap. You will be able to determine whether high or low volatility will work best with your trading style and in which of the sessions we find the most significant supply and demand imbalances. Lesson 2, Strategy Add-on, Opening Hours Trader. During which time frame of the day are banks and institutions most active? This is an essential question for daily income traders who prefer to trade equity indices. Based on several examples, I will show you during which period equity indices trade in price regions where supply and demand tend to be in the greatest imbalance. During that specific time frame, I will guide you how to find low risk, high reward and very high probability trade setups for daily income. Lesson 3, Strategy Add-on, Globex Breakout Bait. As the title of this lesson reveals, I will show you how novice traders are trapped by banks and institutions. You will learn how you can use and participate in the bait using our supply and demand strategy following the footprints of big institutions. Based on a S&P 500 case study, I will show this important strategy add-on for daily income traders. You will understand the meaning of bull traps and bear traps and benefit from it by generating low risk, high reward and high probability trading opportunities. Lesson 4, Regular Trading Hours Session Charts. This lesson will complement the first lesson in this module. Since futures markets have specific opening hours, it is essential to know about different periods that have only little volume. We will go through each market and I will show you how you can display only the time of the day where banks and institutions are most active. Hence, during that time, we will find low risk, high reward and high probability trading opportunities. So let's jump right into lesson 1, Trading Sessions. In this lesson, you will learn everything you need to know about global trading sessions, market-specific trading hours, and I will show you how you can identify the most liquid and active times for any market yourself. Alright, let's begin with the first topic. Why do we want to know about these different market times out there? Well, let's think about it. First things first. We have to understand the markets that we trade. And this includes that we also have to know the times that they are most actively traded. Meaning, when are those markets most liquid and have the highest volume. During this specific time, we can expect the banks and institutions being most active as well to fill their orders. Consequently, also leave orders unfilled. Ultimately, those market times give us better price pattern behavior. Our high quality supply and demand zones, especially for daily income traders, and more range in price, which will help with our profit potential. Of course, liquidity has also a lot to do with it. If you're a very active futures trader trading daily income, you want to make sure that you have good liquidity. That way, you don't get as much slippage. You get the price that you want and the price that you have originally targeted, or the price that you have your stop loss at. Or in other words, you do get slippage because you don't have enough liquidity in the market that you are trading. If that's the case, when you do get stopped out, you could very easily get quite a bit of slippage and take on a bigger risk than what you had originally planned on. So we always just want to make sure that we have good volume, good price movement. Now, with technology increasing every single year, we are able to trade pretty much worldwide. Any market around the world we can trade, as long as we have the data feed for that. So that being said, we could trade in, say, Dubai, but we are trading something that markets originated a futures product in Singapore or Japan or Europe or really anywhere for that matter. So we could be anywhere in the world and trade a product from anywhere around the world. That's pretty powerful. Through these brokers and exchanges and data feeds, we are able to do that. Now, not all the markets are open all the time though. This is important that we realize this. Now, this is the spot Forex here. The Forex market is open around the clock 24 hours a day. That's great. That gives a Forex trader the ability to buy, sell, manage the trade, move their stops, do whatever they need to do to manage the trade or get in or out of the trade pretty much anytime during 24 hours. That's a great advantage there. Futures markets have that advantage too. It's almost 24 hours a day. Most of the futures markets are open close to 24 hours. But there are some markets that are not. So we want to make sure we are aware of those. Of course, the stock market hours only 6.5 hours per day. That's for the US stock market anyway. So 6.5 hours a day, a big disadvantage as far as from a trade management perspective, from being able to get in or out of our trades anytime you want or need to. Alright, let's take a look at the global trading session or currency trading time periods. This is very important for you to understand as a futures trader, specifically trading the futures currencies for daily income. Any of the currencies out there that you are looking to trade, like the euro, the yen, British pound, Australian dollar, Canadian dollar, US dollar index, and the list goes on, we want to look at what time periods are going to be most active for us. The first trading session or time period that we are looking for is what we call the Asian session. Now, it's really a collection of different Asian currencies, and we include Australia as well. Of course, you could even add New Zealand, the Kiwi to it if you wanted to, but bottom line, the Asian session is going to start right about 6 p.m. and goes till 4 a.m. Standard Eastern Time. That daily time slot is when we would focus on our Asian markets. Now, that's usually going to be currencies, but it could be other futures products that trade in that region as well. Maybe it's soybeans, maybe it's cattle, or any other Asian market that we can trade. Now, the European session that starts right about 2 a.m. goes till 11 a.m. Standard Eastern Time. So that's when your European markets will be very active. The European markets have a lot of futures products that we can trade. Not just currencies, but also a lot of commodities and even equity index markets. The US session starts becoming very active at 8 a.m., goes all the way till about 4 p.m. Standard Eastern Time. Then there's also a so-called dead zone. If you look at this from a global perspective, this is where the futures markets are most inactive, where there's really no overlap of the Asian, European or US session. There's no region that's really actively trading during that time. Although the currencies trade around the clock, so they're open, you can trade and place orders, there's just not a lot of activity from 4 p.m. to 6 p.m. Standard Eastern Time. Again, from 6 to 4 a.m. you got your Asian session, and then about 2 a.m. you have an overlap from the Asian to the European session. So can you imagine there's probably a lot of activity during that time? Sure is. So from the Asian markets to the European markets, we'll see quite a bit of activity. So that's a nice time to trade for daily income there if you are up about that time. Then the real big overlap or the spike in volatility starts when you have the European session and the US session overlap. That starts at 8 a.m. So bottom line, as a daily income trader, you should focus on the overlapping sessions because of the liquidity aspect. Order placement for weekly and monthly income, on the other hand, you can basically do 24/5, even during the dead zone, if the market that you're trading is open. Alright, here's a Euro futures chart example of what a typical trading session looks like. Again, the dead zone, not much activity there. You can even see price going pretty flat. In the Asian session, Sydney and Tokyo, it is pretty similar there. However, the range in price movement is getting a little wider. Then you have the Asian European session. We have a little overlap, a little spike in movement there. Now volatility is picking up during the European session, much more activity going on there. Then the US session really becomes active, especially where you have the European and US session overlap. You start to see a big pickup in price activity and price volume, price range and profit potential as well, in case you're trading for daily income. Now, even though this is just showing one particular chart, keep in mind this is a global market. So what you're seeing here is very typical of many markets around the world. But if you're trading, let's say, a specific Asian market like the Nikkei or a specific European market, maybe the DAX, of course they're going to have different timings where they're really actively trading. It might only be a 3-hour or 4-hour time window of opportunity there where it's most active. So that's just getting to know the product that you're personally trading the most and identifying when it trades most actively. Alright, let's take a look at some other examples of some futures market hours. In other words, how do you find the hours available of when these markets open and close and when they are most active? That's what we are going to talk about next here, and a great resource for that is the cmegroup.com website. Now, there's something else that you need to be aware of. The time the open and close times are set by the exchange. However, this is what you need to know. They can and do change, but they don't change often. That's the good news, okay? But they can and do change. So the opening time may change, the closing time may change. So you want to be aware of this. Just come back to it from time to time, maybe once per quarter, double check it on the markets that you trade. Alright, so let's take a look at some more specific examples of times. So here we go. Crude oil, natural gas, copper, silver, gold, S&P 500, Nasdaq, Russell, Dow Jones, Nikkei, all open at 6 p.m. Standard Eastern Time. They basically trade around the clock 24/5 and close at 5:15 p.m. Consequently, they're only closed for 45 minutes every day, except weekends. Weekends, Saturday and Sunday, all markets are closed. Remember, these timings can and do change. So from time to time, maybe once per quarter, just go to the specific exchange website and make sure that the times haven't changed for that market that you're trading. Now, we are getting into the European markets, the DAX, the European Stocks Index, the Euro Bubble, the Euro Bund, all open at 2 a.m. and close at 4 p.m. Standard Eastern Time. Consequently, for almost half of the day, these markets are closed. Now, what about agricultural and livestock markets? Soybeans, wheat and corn all open at 8 p.m. and close at 2:15 p.m. Standard Eastern Time. Live cattle and lean hogs open at 9:30 a.m. and close at 2:05 p.m. Standard Eastern Time. Very tight market in terms of opening times, as you can see. Coffee opens at 4:15 a.m. and closes at 1:30 p.m. Standard Eastern Time. Cocoa opens at 4:45 a.m. and closes at 1:30 p.m. Standard Eastern Time. Now what about the currency and US Treasury market? The dollar index opens at 8 p.m. and closes at 5 p.m. Standard Eastern Time. US 30-year bond, US 10-year Treasury note, US 5-year Treasury note, Euro, Yen, Swiss franc, British pound, Australian dollar, Canadian dollar, all open at 6 p.m. and close at 5 p.m. Standard Eastern Time. Alright, Let's take a look at the real market example and let me show you specifically how we can look at the market and identify when the best time to trade is going to be based on liquidity and price movement. For this example, we've selected CL, crude oil. Now, for that purpose, I'm using a 15-minute chart and I will pull up a volume indicator and just to show you basically where this market has the most liquidity. There are a couple of ways you can do that. You can right click on the chart, select studies, click on add study, go to indicator, add volume average, click OK, that's it. Now you see the volume displayed on your chart. On your chart it might look a little bit different because I customized the colors of my volume indicator, but anyhow it will serve the purpose regardless of how it looks like. What I'm doing now is looking for the big peak in the grouping, not these isolated peaks here and here, alright? So where you see these peaks showing up, that is where you have the most volume on those particular days. You can see in between this time period here, for example, or here, this is where this particular market oil is least active. So now we can say, alright, here's where it's most active and here's where it's least active. Now keep in mind, we can place a trade anytime we want or need to during the entire market hours. Especially if you do weekly and monthly income, this becomes less relevant, basically irrelevant. We can manage our trade at any time we want or need to, but if we are going to be actively trading for daily income, we want to get in and out at the prices that we want to with very minimal slippage, good price movement and good liquidity. Hence, we need to focus on the time periods that have these big spikes in volume, big grouping of volume. So for example, from here to about here, that's where you see the majority of the liquidity. Again, from here to about here, from here to here, and from here to here, and so on. So let's just take a look and see what time these actually start at, just to give us a good estimate here. So that's consistently about 8 AM there. We see twice volume starting to pick up a little bit earlier, but most of the time it is right around that 8 AM time window. Now, this is all standard Eastern time that you see here. Make sure your chart setting is set to exchange time. So starting right about 8 AM is where we really start to see the volume to pick up in the crude oil market. That's when we start to see the liquidity to come in. Alright, that's good to know. Now, when does the liquidity go out? What we can observe here is that we always get one big push in the end and then it drops off significantly there. Well, that's because that's right about near the close. So here, here, and then again here, it's consistently about 3 PM Standard Eastern Time. This is where we want to really start saying, all right, my liquidity is going to drop off soon. Now, for the crude oil market, we have clearly narrowed down the time window when this market is most liquid. We can summarize that the crude oil market is most liquid, so basically prime time to trade for daily income traders from around 8 AM to 3 PM Standard Eastern Time. Again, important to understand, if you are a weekly, monthly income trader and you're going to be taking a position and holding it for several days, weeks or months, then this isn't that big of a concern for you. So this is again more for the daily income traders. So you can do this with any market that you want. Pull up the symbol and put on the volume indicator and just map out where did the volume start to increase, then where did it start to really diminish. Then just look at the times and that will give you a real quick estimate of when that market is most advantageous to trade based on the liquidity and price movement as well. As daily income traders, what we also have to make sure is that our lower time frame zone is ideally located around that time window of opportunity. This goes back to the concept that during the most liquid time, banks and institutions trade as well and fill orders because ultimately they cause the spike in volume. Hence, during that time, they also must leave orders unfilled and are not able to fill all their orders. We can see that on a few examples here. The supply and demand zones that work the best are usually located around that time window of opportunity where we are seeing the volume to be at its peak. Who is causing that big spike in volume? Banks and institutions, of course. So, conceptually speaking, right at that time when banks and institutions fill orders, they must leave some orders unfilled. So part of our daily income rule should be in that case that our lower time frame zones are located around that specific time window. So what you would do as a daily income trader, you would apply your 3-step process. Nothing changes here. But when it comes to lower time frame zoning process, you only look for high quality zones around that time window of opportunity. If you find a zone that is located outside that time window of opportunity, you dismiss it. That is a clear rule you must incorporate in your trade plan if you trade for daily income. Great. So that's it for this lesson. In the next lesson, you'll learn how to use the opening hours trading strategy add-on. Stay tuned for the next lesson.